Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And before Trump, we had a word about that if Trump would get elected as a president for United States of America, then we would have an outflow in the market. And yes, outflow did happen in the market. So fortunately, some business newspaper published that, and the source is not only our favorite Bloomberg. So we got this data, and we would like to have a video on this data, and we would wanted to tell you that how the Trump presidency is going to be impact the show over the period of the time. Although we all are aware of the fact that the Trump is not going to be the Trump is scheduling its office effective January 2017, so roughly 30 days to go for Trump. But still, we need to understand that how Trump presidency is going to be is impacting the global financial markets. So if you look at this chart carefully, which is right up front you will get to know that bonds are going to be the major hits. And when it comes to the bond, I wanted to tell you one important fact. Approximately 1.37 or 1.4, something like this, $1 trillion of bond wealth has already been evaporated from the portfolio of the bond traders. Rational, because the US 10-year yield is now trading at 2.46%. I've taken an example of a 10-year yield. Across all tenors, the yields are moving higher. If yields would continue to move higher, then things would be bygone for US. Bygone means bygone for the bond traders. Now, we all know that majority of the bond traders, including PIMCO, they are keeping a very less bond as held till maturity, and majority as available for sale or held for trading. And considering this fact, available for sale and held for trading, they need to consider the impact of the mark to market in their book. And as per the latest figure from the business sources is concerned, this impact is approximately $1.37 trillion. Because of course, if the yield would increase, the value of the principal would decrease. The present value would decrease. And if the present value would decrease, then this is a loss to the bond trader, rather it is not a gain to the bond trader. But unfortunately, what is happening that the yields are continue to getting increased in the market, and sitting today, yield is 2.46%, and a lot of talk which is happening in the market that yield might go to 3%, and if it touches 3%, then it might go to 3.5%. Another thing which we seriously need to consider here, once we are talking about this, is that because yields are getting rising, so of course the people who was investing, because pre-Trump the yield was 1.75%. Post-Trump, in fact, it was not 1.75, it was 1.25. But as soon as people get to know that the Hillary and Trump are very close, or they are, or the margin of the error is very limited, the yields getting rising. As soon as the yields getting rising, it has reached to 1.75. From 1.75, the maximum it touched 1.85, which is roughly 7th November 2016, one day before the American election. And on it, as the results start flowing in, the yields got higher, 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 and rest is the history. But if you look at this chart, you will get to know much more interesting figure. And that interesting figure is that we already told you number of times that India, Philippines, and Indonesia, they are acting as a carry currency for the traders across the globe. If you look at the India, then they are selling bonds, and the bonds they sold is roughly $1.4 billion. If you look at Thailand, they sold bonds turned up to $2.4 billion. And if you look at Indonesia, they sold approximately $800 million. On the other hand, they consistently reducing their exposure in equities also. Equities also they have reduced by, in India they have reduced to roughly 1.3 billion or so, and in Thailand they have reduced to 300 million, and Taiwan is the number one where they have reduced to equities. So if we collectively add all this, then we will get a figure of $11 billion. So this is the amount which people have already withdrawn from the market, and this is the figure of 19th to 17th November. The latest figure is not yet available. And if this would continue, then I think that globally the institutional investor would take a huge amount of money out, because the yields are rising in the US. Not to mention, Federal Reserve is ready to hike the rates. but when they are going to meet in January, at least by 25 bips, because of course this non-payroll firm numbers turned up good, and Italian referendum will also increase the dollar index, because the value of the euro will get down, which is currently at 1.06. It might go to 1.05, and if this would happen, of course, dollar would act as a safe haven. And if this would act as a safe haven, the valuation of the DXY would surely be grow. So this was the purpose of the video, is to introduce you to the extent of the outflows or the reverse carry which is happening because of the Trump, and that extent stands roughly $11 billion now. This is the figure which we taken between 9 to 17th November, because he got elected on 8th of November, and 9 to 17 November, the latest figure not yet available. As soon as we would show it more. Before winding up this video, we would like to another add that if Federal Reserve would hike the rate, then the LIBOR would go up, and the impact of increasing LIBOR would be on $1,700 trillion across the globe. Because I hope you still remember that 2008, when the LIBOR scandal happened, although not unearthed happened in 2014. And still there are a lot of prosecutions which are going on in the market by the regulators, where they are finding banks like UBS, Barclays, and so on and so forth. If LIBOR would happen, then I'm sure that there are many companies in Asia, and especially in India, where the coupon only swaps, because every swap would have three components: principal only swap, coupon only swap, and some of these two known as cross currency interest rate swap. If the yield would continue to rise, right, if the Fed would hike an interest rate, LIBOR would inch up. And if LIBOR would inch up, then one thing would surely happen. And that thing is, not to mention, all these people, those who have swaps in the book, whereby the coupon only swap has not been hedged appropriately, or it is still open, they are gone. And all those people, those who are buying dollars to pay their coupon, what they did, they not fixed the coupon only swap, which is floating to fixed or fixed to floating, and there are different kind of coupon only swaps we have. Then they are also gone. So I'm not scaring you, but the threat is looming on us. If you have a swap, you not hedge that, or it is still unhedged, then please get it hedged. If you don't know how to hedge, we are here to help you. With this, I would like to thank you, and I would like to remind you that we have our online academy, which is TR Consulting, which is offering 16 courses across the globe. You are welcome to participate in any of our online courses, and at the same time, we have our own foreign exchange consulting desk. If you are a trader, you are dealing in foreign exchange, you are looking for a consulting, you are welcome to call us. We are giving a lot of services. Our website is www.treasuryconsulting.in, and my email ID is rahul.magan@treasuryconsulting.in. Thank you and have a great day.